Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. It's so good to have you back. I apologize for yesterday's video. I had such a headache. I had a migraine, and that's neither here nor there. But today is a good day. I do feel better. Let's get right into it. Hey, you guys do know to check out the links at the end of this video. You know what? Make sure you check out the top link below. Download it. Listen, there's good stuff in there. We'll talk about it at the end. The retail investor has returned to the stock market. Now, we know that AI has been just pushing the market up. Every mention about AI is just, it could be Wonder Bread. It's Wonder Bread AI now, right? And it's just pushing the market up. And there is a little bubble that's happening with AI. And I just want you to listen to this actually, because it's a lot of good information in here.
Meantime, another factor that could be driving this new bull market, the return of retail traders. Fresh numbers show inflows are back on the rise. Pippa Stevens is here with a closer look. Pippa.
Hey, Kelly. Well, the retail trader is back because inflows from retail investors averaged $1.36 billion per day over the last week. New data from Vanda Research shows. Now, this marks a turning point since retail investors had largely been on the sidelines over the last 3 months. The firm pointed to several factors driving the inflows, including better than expected economic data and the debt ceiling deal. But most importantly, it's enthusiasm around AI that is fueling this round of buying. That is notable because initially retail investors weren't buying the hype. Because of that, Vanda said levels don't look frothy, with likely more retail buying in the coming weeks. Now, looking on a more granular level, we can see what retail investors are actually buying. Tesla, of course, tops the list with $1.22 billion worth of shares purchased in the last 5 days. Apple and Nvidia.
All right, let's look at that. Look at that. Tesla, 1.22 billion. Apple, Nvidia, AMD. Just look at that. The reason why I froze it there is I believe that there's yet more room with the S&P hitting a new high. I believe that there's more room for these to continue to run. Let's continue.
Follow, each with more than $300 million. AMD and Amazon round out the top 5. So those figures are on a total dollar basis. But if we look at which names are seeing the most new interest, Dollar General takes the top spot. The retailer saw more than 300% increase in volumes over the last 5 sessions versus the prior month. T-Mobile and Lululemon also seeing a jump in interest, Kelly.
T-Mobile.
Some of these smaller ones, you got to wonder, like, do they know something we don't? Why are they targeting? Household name, though, everyone knows what T-Mobile is.
It is, and it's funny because the street's been pretty bearish on T-Mobile for a lot of reasons, too. And we often find this divide where, listen.
So that's exactly what's happening. The retail investor is pumping back in. And as you well know, that the retail investor is not the majority of investors. There's trillions of dollars that go through, billions of dollars that go through the stock market weekly, billions, and actually trillions weekly that go through the stock market. And most of that is not you and I, the retail investors. All right. It's the whales. It's the whales. So I wanted to cover that really quick. And I also want to go over this also too. Let's look at this. Former SEC Chair Clayton breaks down the new lawsuit against Binance. So we know that Binance has the lawsuit. Of course, the SEC sued Binance first, and then the very next day, Coinbase, right? And because of that, we got Cardano sinking. Binance US suspends US dollar deposits and withdrawals. Of course, they reported this, right? So it's kind of like a domino effect right now that's going on with these crypto brokers that are just fearful of what might happen because of this SEC lawsuit. Here's one of the issues right here with Robinhood being a crypto broker. Also, Robinhood moves to cut support for Cardano, Polygon, and Solana, right? Robinhood opted an Act 3 tokens after the SEC listed them as unregistered securities, right? And so that's the whole issue. These were three cryptos that in the lawsuit that the SEC said were securities. They were acting like securities, but they were unregistered like securities. And that's the whole lawsuit. That's the whole lawsuit against XRP. And now we got Cardano, Polygon, and Solana. And you guys know that I like Cardano, Solana, and Polygon. And so the only crypto that seems like it's clear right now is Bitcoin, right? And so it causes this problem. And there's a lot of these apps now that are just trying to comply. They're not trying to dump your crypto. They're simply trying to comply with the SEC. They don't want to get in trouble, right? And so Robinhood is delisting. Now, remember, Coinbase delisted XRP years ago when they came under the lawsuit. Because why? The SEC said that they were a unregistered security. So they have to protect themselves, and that's why Coinbase delisted XRP. Now you got Robinhood delisting Cardano, Polygon, and Solana for the same reason. So in all honesty, and I'm not a fan of Robinhood, Robinhood is not playing with your money. It's not Robinhood this time. Robinhood just don't want no trouble, okay? Let's go to the next news for this Saturday, because this is a story that's going to continue to go on. I don't believe that the SEC has a leg to stand on. This is part of his greatest hits. As a matter of fact, listen to this 1 second.
The U.S., does this play into the hands of Bitcoin maximalists who say, hey, that's the only safe cryptocurrency out there?
Well, I think the answer to that is yes and no a little bit. In some ways, this case is just a rehash of some of the SEC's greatest hits. They make an argument about a confusion of functionality, that Binance is an exchange, it's a broker-dealer, it's a clearing agent. They make the same arguments about selling unregistered securities and lying to investors about risk management metrics. But what I think makes this case more unusual, and which brings it out of the line of recent SEC cases, are the extensive allegations of market manipulation. The SEC alleges that Binance and related entities engaged in what are known as wash sales, i.e. transactions to pump up the price of crypto securities. And by doing so, they did two things. First, they gave the illusion of liquidity in what might have otherwise been an illiquid market. And two, they pumped up the price.
So some of us see that it's a buying opportunity. Some of us think that it's a buying opportunity for Bitcoin, right? That's what I see. So I'm buying more Bitcoin. Now that he is coming after Cardano, Solana, and Matic, now that he's coming after those, now it's just safer for me, not for you, for me, just to buy more Bitcoin, because it's forcing the price of Bitcoin down too. Now, long term, I think it's going to be create a buying opportunity for all of them, because I believe he's going to lose. The problem is, look at how long XRP has been dragging out. So Gary Gensler he's just dirty, all right? He's just dirty. So you have to make your own decisions and your own choices. I know you like me, you're about tired of this crypto train, but at the end of it, there's going to be a period of time between now and the end of the year where it's going to be just a good time to buy. As a matter of fact, now, if you ask me, is a good time to simply accumulate, right? Not just going all in, just simply accumulate through this. If you're patient long enough, you will win in the end with crypto, especially Bitcoin. Now let's wrap up with Tesla. We all know that on yesterday, Tesla ran up and was pretty much flat after hours, right? And, some say that, I can see it going to 265 to 270 even. That's just me, right? And that does not mean it's going to be a straight line up. It does not mean that, good people. It just means that it could get up there and eventually it will get there, all right? And so you just got to be careful if you can't afford, if a pullback is going to, freak you out, then you don't need to be in that play. But I see a path from 265 to 270, and I actually entered into some option plays accordingly, all right? But remember, stop loss, stop loss, stop loss. Protect your money, right? Protect your money. So because they're allowing GM and Ford to use their charging station network, creating more revenue for them. I covered this yesterday, but I had such a bad headache. I thought I did a horrible job. So what's happening now is this is what happened. They are all of the other charging stations are taking a bath, and I mean a double-digit bath. And Tesla has taken their lunch, right? So that's what's going on. One more thing, since I got you guys on the weekend, China. China has this central bank downplays deflation fears, right? They're downplaying deflation fears, but I want you to listen to this for a second.
The country's producer price index just reported its steepest year-on-year drop in 7 years. So just how bad is China's post-COVID economy? Eunice Yoon is live in Beijing for us with the latest. Hi, Eunice.
Hey, Kelly. Well, it's looking pretty bad. The factory gate prices for May came in worse than expected, down by 4.6%. This is on weak demand, not only here, but also overseas. Consumer inflation came in near zero. May CPI was 0.2%. This is quicker than the 2-year low that we saw in April, but still weaker month on month. Research from Capital Economics says that the soft data may be a sign that the post-COVID bump is petering out, because the backdrop, of course, of all this is that the soft data is coming after worse than expected trade data just this week, also amid an record high youth unemployment, and also during an ongoing property slump, which Nomura has described as dire. Now, the central bank here today attempted to ease some of the deflation fears, publishing a speech by the governor saying that the CPI would pick up in the second half to about 1% by December, and that China has, quote, ample policy room. Well, as you could expect, that has just stoked ongoing speculation that China is going to come in with some sort of stimulus, either moving the RRR or possibly interest rates. Some people are saying it could come as early as next week. This would be an eventful next week because not only would that happen potentially, but also we have May monthly data, even more of it, industrial output figures, for example, retail sales. And also there is a rumbling that the U.S. Secretary of State Antony Blinken is going to be coming here to China and possibly meeting with his counterparts and maybe even Xi Jinping around June 18th. Back to you.
So because of that, I am looking at Baba, which is Alibaba, and I'm also looking at Tencent. And I don't hold Chinese ADRs. I'm not a long-term investor into Alibaba or any of those companies. You guys know I have nothing to do with NEO. I just, I don't like the love-hate relationship, okay? Is you is or is you ain't my baby. Break up to make up, that's all we do. All of those songs, our relationship with China is it just keeps being that as it pertains to our stocks, right? But what I do is I do go in and I do options on Alibaba or Tencent, or sometimes I just buy the stock right out, hold it, run it up, and sell it. Remember, the way that we trade is not one size fit all, and we have to trade the market that we're in. I'm going to leave it right there, good people. Listen, go ahead, download the top link below, or the link will be provided for you or in your right-hand corner, and download that link. Learn the stuff you did not know about. Learn how to chart. Josh is teaching that. Learn about options. Learn how to make money. Keenan is teaching that. I come in and Josh come in. We got all of these things. We got Mommy Trader in there, and we got Stock Curry in there teaching basic fundamentals. And we're going to continue to add. Next week, we'll be adding some more lessons to the class. All right. So make sure you check that out. And I hope you have a blessed and safe weekend. We will see you tomorrow with a market update and my inspiration. All right. Live, love, laugh, learn, and earn. Remember, be kind, rewind, do it again.